I'm Amy O'Keefe. I'm a partner in the corporate M&A and private equity group at Nixon Peabody, and I am joined here today by Phyllis, and I'm so happy to have you here. So can you tell everyone just a little bit about what you do, your career journey, and then we'll jump into a chat.
Sure. Well, my career journey, at least for the last 25 years, has been at the intersection of social impact and finance. I was at Children's Investment Fund Foundation in London for about 10 years. I was at UBS as Global Head of Social Impact for 11 years. And I am now with Advanced Portfolio Management, and we're building out a new division called Social Investment Solutions. And what we're doing in that division is creating an approach to investing in the S of ESG. Right now, it has been really under-researched and underutilized as an investment tool. So we've created a way to identify signals from social factors.
That's fantastic. What a thing to be focusing on in today's environment. And I mean, we're here at this conference that's focusing on women in a historically male-dominated space. So that's something that I'm super passionate about. But if there's anything that's maybe even more important and more global than women, it's, the social impacts that are going to impact all genders. So how did you kind of get started into this, and how did you shift from what you were doing before into this ESG with a capital S focus?
So when I was at UBS, I did a lot of work around issues involving ESG and have long believed that the S has been underutilized. And so I'm working with somebody named Robert Kiernan, who did a fellowship at the Kennedy School. And what he studied there were how do sin stocks react to markets. And what he found was that the cost of capital is higher for those, for sin stocks. And so I asked him, well, if that's true, then wouldn't the inverse be true? That companies that treat their employees, their communities, and their customers well, shouldn't they outperform? And so we spent the last 9 months testing that hypothesis.
And what have you found?
We have found that indeed, surprise, surprise, companies that treat their employees well, engage with their communities, and are responsible for their customers, they actually outperform in the market.
Shouldn't be a surprise.
Yeah.
But yet
we've not been able to do this before, because now with the advent of large language models and AI, we can take all of this qualitative information and structure it.
Amazing. Do you feel, ESG used to be something that I was hearing multiple times a day, week, month, for many years. And I feel like there's been a little bit of a shift over the last year away from it, which is certainly something I'm not happy about. And I imagine you feel the same. Have you felt that? Or do you feel like maybe it's just the lens that I'm looking at it through is skewed? Like, what do you feel like the environment's like?
There is definitely backlash. And it's political backlash against ESG. However, looking at risks associated with environmental issues, looking at risks associated with how a company is governed, and looking at a risk with how a company treats people is really critical to analyzing how a company is going to perform financially. So, we can call it what we want. Maybe we don't like the acronym anymore, ESG, but frankly, it is, smart investing to look at these types of risks. So ignoring them doesn't make any sense, whatever side of the aisle you're on.
But it's the same sort of idea. Like, we've long known that when you have diverse voices in the boardroom or putting a deal together, you're going to get a better business outcome. So how do you sort of extrapolate that into the ESG world?
Yeah, that's a really important point. So there's all sorts of research that shows when you have a more diverse leadership team, it leads to better results. And the issue with social factors, and what nobody really until now has been able to do, is identify the dynamic nature of it. So if we look at during COVID, a company that spoke out against racial injustice and a company that actually made tangible moves to address equality, perhaps appointing people of color to a board, they saw a stock price increase of 1.7%. companies that just gave it lip service at that time but didn't take tangible action, saw a stock price decline by 0.7%. So now, what does that mean now? Now, maybe the opposite would be true because of the politics. So social issues are really dynamic. What's in favor in 2020 is not in favor in 2025. And so the key part about DEI or any social issue is to understand really what is the sentiment around that issue and whether or not a company is just giving it lip service or taking really serious action.
And how do you tell the difference?
Well, we have built a large language model and a methodology to identify really tangible actions that companies are taking. And you do that by looking at all of their reports out there, looking at, and most importantly, looking at news information. And you've got to look at that on a daily basis. And that's what helps us identify the sentiment around particular issues.
Incredible. So when you think about the future of ESG and ESG investing, what do you think are the opportunities and what do you view as the challenges?
First of all, ESG is here to stay. You know, investors who ignore these risks do so at their own peril. I think right now we're going to see the names change. Maybe we're not going to use ESG. Maybe we're not going to use the word sustainability. You know, maybe we're going to call it something else. However, it will still exist. And even though here in the United States we're seeing consolidation of ESG funds, less so in the rest of the world. And there's still countries are implementing regulation forcing companies to comply with issues around environmental and social and governance. So I think it is here to stay, and I think the trend that we're going to see is a bigger focus on the social.
What would you say and what advice would you have for young women who are here with us at this Women of Leadership conference today, who are interested in getting involved in ESG and social impact investing? What advice would you have for them starting out?
So, first of all, understand finance. You know, what I started my career in public policy, working in government, and I really saw the need for a systems approach. And thinking about and understanding resource allocation is a critical part of that. And impact investing is a critical part of responsible resource allocation. So understanding that, not at a surface level, but really understanding that deeply and what moves markets is going to be critical for people who are interested in getting in impact investing. So I would advise you out there who are trying to get into the field to go deep.